Right. Let's just kick off whilst a couple of people are still coming in. So, morning everyone. For those of you who don't know me, which is probably most of you, I'm Jack. Pretty much do all of the marketing here at OWNA. And as part of that, there's kind of partnerships. So just want to introduce you to our new partners, Trendsight. So Trendsight do bookkeeping, payroll, reporting, all that kind of stuff for a few of the centres using OWNA. And what they wanted to do today was just kind of give you a rundown of some insights that you can pull out of OWNA and your accounting software. In this case, Zero. And then yeah, just how you can use those insights to kind of build reports and kind of just make better decisions for your services. So yeah, what I'll do is I'll pass over to Wanda, so and then he'll run the webinar. And then basically, if you have any questions, I'll be on the chat, so just pop them in the chat here. I'll just pop a message in here so everyone sees. So yeah, just ask your questions in there. I'll jump on. I'll probably just interrupt to Wanda, just to say, hey, we've got a question from someone, and then yeah, we'll try and get those answered really, really quickly. And then at the end of that, we can do a bit more of a Q&A for anyone who wants to stay, and ask some questions, and Tawanda can go through that chat, and kind of answer them one by one. So yeah, I'll just pass over to Tawanda now.
Fantastic. Thanks, heaps, Jack. Good morning, everyone. It's great to be here with you all today. So like Jack said, we're here to talk a little bit about, building insights into your reporting, and working out how you can combine some of your data with your owner data with your zero or accounting information. So before we get into that, a little bit about who we are and who I am. So I run a bookkeeping and payroll business called Trendsight. So we specialize predominantly in a few industries, but childcare being one of our key ones. So we count ourselves as industry experts in the space. So our goal is really to make sure that services can make really good decisions based on all of their data and make decisions that can help them, improve and, make better calls. So that's a little bit about us. I've been running this business for about 8 years or so, and we look after a number of owner customers and also other customers in the childcare space. So first off, I want to kick off by doing a quick poll. I'd love to know a little bit about who is on the call today. So have a look at the poll. I want to know, oh, sorry, just the wrong one. We'll try that again. So let's have a look at who's attending the webinar today. I want to get a bit of an idea of whether you are a service owner, or a director or manager, or if you're admin staff that may be doing a bit of dabbling in the bookkeeping space, or if you are a bookkeeper as well, looking to get a bit of insight into what you can do with your reporting. So it looks like the majority of people are either service owners or directors. So we'll just run that for another 20 or so seconds, and then we'll close it off. Okay, fantastic. So I'll end that poll and I'll just share the results quickly. So yeah, so it looks like the majority of people on the webinar today are service owners. We do have, directors and managers, and we do have also a lot of service owners. So it's good to have everyone on board, and I'm looking forward to spending some good time with you all today. Okay, so what are we going to learn today? So today we're going to look at how do we get data out of OWNA, and also out of Zero. We're then going to look at how do we combine that information to get some really, really valuable insights into how your service is performing. And we're going to see those insights into a reporting template that I've put together for you. And that reporting template we will provide for you at the end of the webinar as well. So stick around so you can get the link to that. And then lastly, we're also going to show you how you can level up that reporting experience. So, and I'll share a little bit about what we do with our customers using a tool called Fathom to help visualize your reporting a little bit better. And like I said, stick around to the end and we'll give you access to our free reporting template, which you can start using today. Okay, great. So the first step that I want to go through is working out, well, what data do you have in your system? Where does it live? So we're going to go through a little bit of, I guess, the terminology that I'm going to use today, just to make sure we're all on the same page. So firstly, we've got, the types of the data and then where it lives. So we're firstly going to look at operational data. So when I'm referring to operational data, it's really what is the information that lives in OWNA. It's your bookings, it's your attendances, your absences, that kind of information. So all of that lives within OWNA, and it's operational because it's what you do on a day-to-day basis. Next, we're going to look at your financial data, and this is really what's living in your accounting system. So if you're using Xero, it's things like your profit and loss statement, your revenue, your expenses, your wages, that kind of information. And from that, we'll get some metrics like profit margins, so gross profit margins or net profit margins. And then the last type of data we're going to look at today is, I guess, the output of all of that. So when you combine your operational and your financial data, you can get some really good performance metrics, or what others might call KPIs. So stuff like your occupancy percentages, your wages as percentage of revenue, your average fees, and things like that. And we're going to get that from, we're going to be able to produce that in that reporting template, which I'll share with you all, and then also in reporting tools such as Fathom. So we're going to do one last poll, and this poll is really going to be about, what is your biggest challenge? I'd love to know what your biggest challenge is when it comes to understanding the financial performance of your service. So it could be that you don't have enough information or enough time to analyze your reports. You don't know what metrics or KPIs you should be looking at. You might not have a really good place to actually, see that reporting, or maybe just don't know where to start. So I'd love to know what your challenges are, and that'll give me a bit more focus on how we go today. I'll let that run for another 10 or 15 seconds, and then we'll just close it off. Okay, fantastic. That's everyone. Okay, folks. So it looks like the biggest challenge is you don't have a system in place to track your financial and operational data. So you're in the right place, because today I'm going to give you exactly that. So something you can look at and use by yourself without the need for anyone else. And then I'll also show you a little bit about what we do. Another challenge seems to be you don't know which ones to focus on, which metrics. So again, we're going to discuss that today. Okay, so we're going to do a little bit of a demonstration. And today I want it to be really practical. So I want you guys to walk away with something you can physically do. So we're going to start off by seeing, well, what can we actually get out of OWNA and what can we get out of Xero? And then how do we combine that information? So I'm going to just switch across to OWNA. So something which I'm sure everyone on the call is very familiar with. So we're just in the demo version of OWNA. So from here today, we'll be able to look at, well, what's a really good report to get data out of the system, and what reports can we use to combine with the information we have in Xero. So to start with, I like to look at the attendance report. So if you go to attendances and then the monthly attendances report, you can run this on a weekly or daily basis as well. But generally, accounting platforms work in months, so running a monthly report can be quite useful. So running this monthly attendance report gives you some really valuable information. So if I just run this for January and get report, we're going to get some really insightful data here. So, and what I'm looking at really is at the top of the screen. So you'll see at the top here, I've got my bookings or enrollments, I've got attendances, absences, and revenue. I want you to keep, almost bookmark these in your mind, because we are going to use these numbers in later on within the webinar. So, but we've got our bookings, we've got our revenue, we've got our attendances. So this is a really good report you can use to get this data out. The reason I really like this one as well is because it's going to show you that information for an entire calendar month. So a lot of the other reports in platforms such as OWNA work on a weekly basis because CCS works on a weekly basis. But this is going to show you the revenue and the attendances for a complete month period. So for every single workday in the month. Once we've got this data, I like to print it off and then attach it in Xero. We can then move into Xero. So in Xero, and today I'm just in the demo version of Xero, so it won't be perfect for the purposes of a childcare example, but it will do the job. A really good report you can use in here is just your regular profit and loss statement. So if you're coming into accounting and then reports, from here you can see a profit and loss statement. You can also see it just there. Run it for the same period. So we ran January in OWNA, so we'll also run January in Xero, and I'll just compare a couple of months. And from there, you'll see we've got our profit and loss statement or P&L. And this is a very accountant-y report. So not everyone's cup of tea, but we're only getting a couple of numbers from here. And the ones that I want everyone to focus on today are going to be our wages. And then also you may have super and any other wage-related costs. And then your sales. Your sales in this case would be, all the income that you've generated from your attendances. So once we've got those two bits of information, we've got our data from our childcare from OWNA, so our bookings and revenue, and we've got our wage information. We can then now start to combine those sets of data to be able to provide us more valuable insights. And to do that, we're going to do it in our reporting template. So we've put together a reporting template specifically for this webinar and one you'll be able to take away with you. So what we're going to do is we're going to enter that booking, attendance, and financial data. And we're then going to be able to automatically calculate some key metrics. So metrics around occupancy, around wages, and around revenue. And once we've done that, we can then interpret those results to make really informed business decisions. So I'm just going to flick across to what our reporting template looks like. And like I said, you will get this at the end of the webinar. What we want to produce is something that looks like this. So this is one I prepared earlier. And as you can see, we've got a few key things in here, how your revenue's tracked over time, your wages as a percentage of revenue, and then also occupancy and average fees. So how do we get this to produce this really good result? So we're going to go to our input tab over here. And this may look a little chaotic. And if you're not a big fan of numbers, you may be thinking, wow, that seems like a lot. But it is quite simple once you get your head around it. So the first thing,
OWNA,
go for it.
just got a question from the chat. So for services that receive like government funding, in this case, to support children with additional needs, if that goes towards the revenue to offset the additional staff needed in childcare, how would you include that in that revenue figure?
So I generally split out government funding outside of things like CCS. So essentially, if you're receiving some sort of government funding to support kids, I'll generally show that separate from your other childcare revenue. Only because unless you're so in Victoria, for instance, where there's free kinder and maybe all of your funding is government funding, then that's a little bit different story. But if you're getting funding for specific purposes, I generally show that as a separate number, and I don't combine that with the rest of the fees that parents pay and CCS. So a key way to kind of think about that is if your daily your booking fee is, let's just say, $150, and then you may get some government funding outside of that, I would keep those two separate, and I would report that separately. I don't know if that answers that question. Hopefully it does. I can see Brenda's asked that.
Yeah,
But
so
hopefully that answers that
I
question.
think probably the other side of it being, yeah, how do we get it to not show the massive overspending on wages, right? In terms of
Yeah,
like offsetting that.
yeah. Yeah, and there's a really good way to do that, which is you can it becomes a little bit more of an accounting conversation. So what we can do in that case is if you've got wages that are specifically sorry, funding that's specifically funding wages, you can also split out your wage costs and therefore have your regular wage costs, and then you might have a particular role that's hired that's been covered by government funding, and you could show those separately. So what you end up with is you're able to show that you've got this revenue that is used to fund a certain wage, and those two things are broken out of the rest of your financials, if that makes sense. So a lot of it is usually done via journal, and it's something that can definitely be done. A little bit technical, but it's something that your bookkeeper should be able to assist you with, or we can help with as well.
Yeah, just got another couple of questions. So one is around how would you use the report to extract data regarding discounts? Would that be something from your side, or probably more so from OWNA?
Yeah, so if we go back to OWNA, here we go. So this total revenue number is going to be inclusive of your discounts. And what I want to do is to include that number. So I want to include discounts in that number. You can show it separately when you record your revenue in Xero. And I might take a step back actually. What we generally do with our clients is rather than recording on the profit and loss statement the deposits that actually come into the bank account, so your CCS, your parent fees, and so forth, rather than recording that onto your profit and loss statement, we instead record this number, the 185. And the reason for that is because CCS comes a week late. So, CCS for this week, we're only going to receive next week. And at the end of the month, that makes a really big difference. So you end up with revenue that is for January falling into February. So we like to record what's actually being received, or what's being earned in the month that it belongs. And what that means then as well is, coming back to the discount question, we can separate out the discounts if you want to see them separately. But when you're now looking at your metrics, they become really valuable. And I'll go back to our report really quickly, and I'll show this average fee. So you might have a budget number, and this dotted line represents the budget for last year. And you might have budgeted, an average fee of $175. But if you're constantly getting 171, it gives you a bit of insight to be like, well, why is that happening? Is it because of discounts? Is it because maybe we've got a bunch of families or legacy pricing or something like that, that's meaning that our average fee ends up lower than we expect. So that's how I would deal with that discount sort of question.
And that
Yeah.
that number as well, does that take in, so when you mentioned about like what is earned, is that kind of what should be received? So does that include like rejected payments and stuff as well?
Yes, so it does. So this number is what you should be receiving. So it's not a cash number, if that makes sense. It's the way to think about it is, for every single one of these bookings that we had, we should have received $150. Whether we received it or not is not the question. It's more about, from an accounting perspective, they talk about it as accruals rather than cash. So you're talking about the money you should receive, not the money you've actually received.
Mm.
Yeah,
Just got one final one as well from
sure.
Ian. So how do you factor in the timing differences? So one example being, um, if there's let's say you pay wages every 2 weeks,
Yep.
when you're doing it on a monthly basis, if you have 4 weeks of revenue but 6 weeks of wages
Yep.
potentially, yeah, how do you factor that in?
So you can actually see that in this report because I'm comparing to actuals. You can see it. You can see it. We've got this, and I'm jumping ahead a little bit, but that's okay because it's good to answer the question. This wages percentage of revenue, where in certain months you've got 3 fortnights of wages. So in July and in December. And you can see that percentage jumps up to 81 rather than the average of about 50%. So there's a couple of ways to handle it. The way we find is the easier and more practical way is to just expect that. So in December, when we budget for our clients, we budget based on how many fortnights of wages are gonna be in that particular pay run in that particular month. So in December, we would expect to see that revenue as a percentage, our wages percentage revenue is 81% or a high number because there's 3 fortnights. Whenever we build that reporting and then whenever we do commentary, what we're looking for is things that are outside of expectation. So as long as you know those things are happening and you can explain them, then you're okay. But it's when you have problems like, so as an example, let's say this was the budget. And the budget over here is saying 68%, but we've actually done 81%. Then that's a problem. But if we're expecting 81%, it's not really a problem. So that's what I say is the easy way to do it, and it's the practical way to do it. The other way you can do it as well is you can actually, again, pass journals into your accounting system to spread that wage cost so that in periods where you have, 3 fortnights of wages, they don't all come into the 1 month, but you instead spread them across the 12 months. It's a little bit more complicated and it does mess up with your payroll reports a little bit. So I don't entirely recommend it. My preference is that with our clients is that we just know that in a particular month, we're going to have 3 fortnights of wages and therefore our wages compared to our revenue is going to be higher. And we're okay with that because we can explain it.
Cool. Yeah, there was one more, probably more on the owner side. So,
Sure.
yeah, just about allowing you to choose your own start and end point for the monthly report.
Yeah, I can probably answer this one because this is a challenge that we obviously have to reconcile from an accounting perspective. It's also why I really like this report, the attendance report. A lot of the other reports that you run out of OWNA, so if I go uh, reports, and if I say try to run sorry, let's look for a better report. Can't think of one off the top of my head. Um, I know what they mean by that question. Essentially, a lot of the reports within OWNA allow you to only, pick a beginning of week and end of week date. And I think the reason for that is because of the way the childcare industry is set up. So CCS is built to work on a weekly basis. And because of that, then the platforms have to almost be built in the same way. It does mean that when we run these reports, we don't get a breakdown of what's CCS and what's parent fees. But from our perspective, from an accounting perspective, that's not as important. And that's why we like this report because this does allow us to actually pick the 1st of January to the 31st of January rather than the first Monday and the last Sunday. Hopefully that answers the question. Unfortunately, it's not a problem that it's not a thing that can be fixed because it's the way the industry is structured as a whole.
Yeah, great. Yeah, I think we probably will just try and move on now. I don't want to take too
Sure.
much time on the questions, but yeah, at some point later on we can go back to it, and then if we've
Cool.
missed any, we'll touch on them at the end.
Amazing. So coming back to the template. So what we're going to do here, like I said, there can look like there's a lot of numbers here, but I'm going to quickly break it down for you. So we've got two sections built out here. You can see last year, and then you've got this year. I've got a little drop down under last year because this can be changed to budget. So if you wanted to compare to budget, you can change that and then just change the year. And then now you'd have a comparison of budget to this year. And that'll flow through to your charts. But for today's example, we're going to use last year to this year comparison. What we've got in here is our revenue. And if you remember, this is just coming from OWNA or from your profit and loss statement. So these numbers. The other things we're bringing from OWNA as well are our bookings and our attendances. And you can see those here, bookings, attendances. And then you've got your number of places, which is most likely a fixed number. And then from zero, we're getting our wage data. If you've brought in the same number for revenue as you had in OWNA, then that would be the same. And you're bringing in your wages, your super, and any other staff costs. And that could be things like work cover or, parental leave maybe, or anything related to staff that you want to include in this calculation. So at the end of the day, it may seem like there's a lot happening here, but there's really only a few numbers you need to add each month. The first time you complete this is going to be the hardest because you need to go and put in all your data. But after that, each month, you're just putting in these 5 numbers. Once you've done that, you'll then produce this report. And I'll quickly go through what's actually happening on each of these and how they can be used. So firstly, we've got our revenue. And the bars represent this year and the line represents last year or your budget, depending on what you've selected. So this will give you a really nice overview of how your revenue's tracked over the year compared to last year. We've talked a little bit about this one. This is a really good metric and one of the key ones that I really like to focus on in the childcare space. And it's really the way to think about it is what percentage of your revenue goes towards wages. It's going to differ from service to service, and it's going to differ depending on whether you're a long daycare service or you're a kinder. But knowing what the target is quite important. And that could be simply looking at, well, what were we like last year? But if you're a newer service, and this demo shows something that was a newer service, so you can see last year while they were still building up, they had a higher percentage, but now things have settled down a little bit, and now they're averaging about 50%. So this will help you work out, am I overstaffing for the amount of revenue that I'm bringing in, or are we okay? The last two are occupancy as a percentage of revenue. So here occupancy percentage. And what this is really saying is it's looking at what is the capacity of your center and how much of that are you using. So pretty standard to see it ticking up until we get to November and then drop back down December. And then January is a bit low, and then we start to pick back up as the year goes on. So this is a really useful one. And then average fees as well. So going back to that discount question, this is really useful because it takes your revenue that you're expecting to receive for the month, and you're working out based on who's actually attended, what is the average, or who's been enrolled, or the bookings you've taken, what is the average fee that you're charging. This is useful because sometimes, you can have certain fees for certain cohorts in your service, and you can be thinking you're generating a particular fee as a whole for the service, but when you look at the actual numbers and what's being invoiced, that can be a very different number. So this metric is quite useful to work out, well, where are we losing some of our fees? Is it through discounts? Is it through other things as well? And what I like to look at in conjunction in particular is these two in conjunction with that. Because for any childcare service, and particularly ones that are like long day services where the majority of their income is coming from parents and CCS, your revenue is really just a combination of who have you booked and what are you charging. So if you can work out where the problem is, if your revenues dip down, it's one of those two things. It's either your fees are down or your occupancy is down. So these two, when you're trying to work out why revenue looks like this, are very, very important. And then I like wages as well, because that's your biggest cost. So yeah, so hopefully that makes a little bit of sense. We'll provide this at the end of the webinar for you to access. And hopefully that's going to be useful for you guys to use. So we'll just pop back to the presentation. So like I said, at the end, we'll have a QR code for you to get access to that report. The last thing I want to go through is what I've shown a little bit of what a do it yourself option could look like. So there was a lot of people who said they didn't know where to track this financial information. So that template is really useful, or where to start. And again, that template is really useful. And it's really useful as a do it yourself option. But if you want a done for you option, this is a really good option. So this is what we do for our clients. We use a platform called Fathom to produce all of our reporting. And we, each month, at the beginning of each month, produce reporting for our clients that they can then digest in a really, really easy way. So we're going to go through what that looks like now. So this is it's a PDF version of it. The way Fathom works is each month we will issue the reporting. Our clients get an email in their inbox, and in that email, they're able to click into a link, and it'll take them through their browser to a browser-based report. They can then also export that report out and share it to anyone they like. So this is the exported PDF version, and it's just got some demo data in it. So the way we build out our reporting for our clients is it's built out in a way that, as you can see, it's a 7-page report, but it's built out in a way that you can take as much or as little as you want. So if you wanted, you could stop on page 1 and be satisfied if everything is, going well, and leave it at that. But if you wanted more, you can always keep digging a bit deeper. And I talked a little bit about, looking at, you'll see these are the same KPIs that we have in the template I shared before. We're looking at revenue compared to last year. We provide a little bit of commentary. We're looking at bookings, average fees, and wage percentage revenue. So really high level, have I gone well, have I not? And you can stop here, or you can go a little bit further and see, well, what does my revenue and operating profit and net profit look like? One of our the key advantages of the report we provide is this dashboard. So because we look after a number of services, we're able to essentially benchmark our clients against each other. And what that means is we're able to compare your labor costs, your overheads, your premises costs to other services, and you can see how do you perform against everyone else. Are you in the top 20%, or are you in the bottom 20%? So it gives you really valuable insight into how you're performing, not just as your own service, but also how you're performing compared to others. So compared to your competitors or peers. So it'll also compare to budget and give you just a bit more information in this dashboard. And then again, if you're wanting to see what that data looks like over time, this looks a lot like the spreadsheet that I just shared. This is what that looks like. And again, if you are like me and like to see profit and loss statements, so if you've got an accounting brain, then we again provide you with some detailed financials at the bottom. So this is the kind of thing that we produce for our clients on a monthly basis. And it's something that is a little bit more involved than the report that I showed earlier, but it's something that can definitely be useful for your organizations.
I just had a question in there about, so for when you're benchmarking, I'm assuming that's benchmarked against your current client base of
Correct.
Does it take into account, like, so if there's an OSH provider, would it benchmark against other OSH providers, or?
So we look after a couple of OSH providers, not a lot. The large bulk of our services are long daycare. and then also kinders. We don't have a lot of OSH services that we do look after. We've got a couple, but a lot of our benchmarking at this point in time is a single benchmark group, if that makes sense. So all of the services we look after is a single benchmark group. As we continue to take on more and more childcare centers that we look after, we'll start to sort of break out those benchmark groups. So at the moment, everyone is one single benchmark group. But as time progresses, we'll look to say, well, great, we're just going to put this is a benchmark for kinders, benchmark for long daycare centers, benchmark for OSHs, and things like that. So at the moment, it is one group. That is the last bit of the presentation. So it's probably, if we've got any last questions, now's a great time, Jack, we can go through them. And while we do that as well, I've got the code over here for you guys. So feel free to scan that and download that template. You'll be able to also get in touch with us if you are looking for assistance for more of a done for you service. Or if you're looking to talk a little bit more with us on what a business like ours can do for your service. But yeah, Jack, were there any other questions that we can assist with?
Yeah, so there's one around so far, let's say going back to that initial report you are creating. If you have multiple services, would you be creating one for each service or altogether or both?
I'll say both actually. So if you've got multiple services you look after, it's always nice to see a consolidated view and to see how the group looks together, but then also good to see individually how services are performing. That way you can work out where the problems are. So sometimes you can't see that in a consolidated group.
Yeah. Matthew was asking, just in general, what do you recommend as a target of wages as a percentage of revenue?
So anywhere 50 to 55% is generally pretty good. But again, it can be, it's a little bit of that's a general answer. It can be, it depends on where you are as a service and what kind of service you are. So if you're a long daycare, then yes, about 50, 55% is pretty good target. But then that could be very different if you are a new service. So if you are just ramping up and your occupancy is still very low, then that's going to be a different number. If you're an OSH, it's going to be a different number. If you're a kinder, it's going to be a slightly different number.
Someone was asking about how to get in touch with you. What's the best way? Do you want us to pop your the Trendsight email in the chat info at Trendsight, or send them to a link? Or
this link is great for that. So if you scan that link, you'll be able to access not just that reporting template, but there's also a link to my calendar, and you can book in a time, and I'll be more than happy to have a chat.
Perfect. Yeah, so Brenda was asking, how much do you have much experience with community preschools and the kind of funding model? They do have some questions. Around that.
Yeah. So to give a bit of an idea of the kind of organizations we work with, so we've got a couple of OSHs, we've got some mainly long daycare centers is what we do, kinders, community preschools as well. That's probably the extent of what we look after at the moment. But yes, community preschool is something we take care of.
Yeah. And then just going back to that wages question, when you do that wages as a percentage of revenue, does that include super and all of the other costs associated with wages?
Yeah, so if you look at on that template, and I'll quickly go back to it. I've got wages, and then super, and then other costs. And then the number we base it on is that total staff costs. So essentially, it's the way we do it for our clients is we incorporate all of the wage costs. So anything that is involved in employing a staff member, that includes training, it includes work cover, it includes super. So anything that is involved in employing a staff member, we include as a wage cost, just to be inclusive. Because if you didn't employ that person, you wouldn't have to do that training for them, and therefore you wouldn't have that cost. So I include that number. But it is more of a preference thing. As a business, we like to include everything.
Yeah. Yeah, great. I don't think there are any more questions.
Cool.
So if that is the case, obviously thanks to Wanda for your time. And thanks to everyone who jumped on. I hope you got a lot of value from it. I will be sending the recording out along with a link to that template if you didn't download it from the QR code. And yeah, if you want to get in touch with Trendsight, there'll be information about that on the email. And yeah, thanks.
Fantastic. Thanks so much, everyone.